Good morning, investors. Welcome to the January 29th webinar presented by Portfolio Builder. Folks, my name is Dean Gallagher. I want to thank you very much, first off and foremost, for taking the time to join us here today. Okay, folks, my role with Portfolio Builder is to help people understand how we help clients before they get signed up. Okay, so if you have any questions at all, I'm going to encourage you guys to save my number and just call me if you have just any questions along the way. Okay, and I'm going to just put it up here. That number is 505, and I apologize for my writing. I know it's not the best with my mouse here. Okay, but it's 505-322-7515. Okay, and I do just want to take a couple minutes, folks, to cover a couple things. Okay, and you guys can call me at any point. That's my direct cell phone. You can send me a text too if you'd like. But just real quick, we want to call out a couple things, right? We want to look, this is our first, we will close out the month of January here today. Okay, I want to point out here that the S&P 500, okay, its performance for the year is 0.06%. So the S&P 500 is negative for the year here, guys. And of course, that could change right before the close. But our Safe Alpha portfolio has produced an $87,969 return in that same period of time. So once again, S&P 500 is flat, actually slightly negative for the year. We're up over $87,000 with the Safe Alpha portfolio, which is the same as an 8.7% return. Since I wrote this up here, it's ticked up a hair, but you could use this as, you could call it 8.5 if you'd like. Okay, so massive outperformance to the S&P 500. That's a factor of 8.7x. Okay, so pretty nice, and it's really cool, guys. We're not just net long trading super risky, ultra risky, uncalculated positions. We're using risk parity, folks, and we have a huge volatility hedge in place. Okay, so pretty cool to be able to see those type of returns in a safe manner, right? We have our disaster insurance, and it's pretty cool. It's actually overall profitable here for the year, which is cool, because we've been able, with all the volatility, to actually produce some gains there. Okay, our GBTC position, which we added this week, is the best fiat currency deflation hedge that exists today. Okay, GBTC, this is it, guys. We previously had silver. We took a $12,000 profit on silver earlier this week, switched into this, and that's already growing really good, producing $7,000 in gains today. Okay, next, folks, we have our COPEX ETF. Okay, this is our copper exposure. Okay, you might be scratching your head. Why in the world do they have copper? Right? Well, a few reasons. If you look at the Belt and Road Initiative, most of you probably have no idea what that is yet, but it's going to be the largest infrastructure project on planet Earth. Okay, it's going to be basically an initiative to convert all completely away from all fossil fuel energy and convert over to green energy through nuclear. Okay, and it's literally going to span all over the world. It's going to be the largest infrastructure project to ever hit planet Earth, and the number one, folks, resource that they're going to need, and the number one mineral that they're going to need to create it, is copper. Okay, guess what? This new push into EV energy, okay, electric vehicles. Hey, Teslas are, some of the coolest, fastest cars made, right? They're going to continue to grow. Biden just, said the other day that all federal government vehicles will be EV soon, right? So guess what? What's the number one material that they're going to need for all of those EV vehicles? Copper, right? You got to have electricity connect to each other. And guess what? Copper is the way that we connect that electricity. Okay. Next, folks, in the portfolio structure, we do have our disaster insurance, okay, or our insurance policy with UVXY. Now, this position, folks, went up over 1,200% in the Q1 of 2020 meltdown. So we keep this in our back pocket in case there's serious market volatility. Okay, so pretty cool here, guys. Now, next, we have our TQQQ ETF. Okay, and if you guys haven't studied this one yet, okay, we have in great detail. This is the #1 returning ETF as far as percentage return ETF that's ever been created from its inception to this point today. This is no joke, as you saw in your email and your text message. This has produced over an 11,000% return from its inception to this point. Okay, so if you had $1 million in that, all right, 10 years and 11 months ago, today you're sitting on $110 million. Okay, conversely, if you just had 10 grand in it, guess what? You have 1.1 now. All right, so this is our core position, guys. This is basically a basket of 103 of the best companies in the United States of America, and really, in my opinion, by far and away in the world. Okay, Jason's as well, and it's really cool, guys, because every quarter, this ETF will bring in the alpha companies, and they're going to kick out the laggards. Literally every single quarter for us. If we just hold this TQQQ ETF, guys, we don't have to see any taxable events, right? By just holding this, and this is going to be for me and my family what takes us into a new status, right? To really the 50 to 100 million mark before I kick off planet Earth. Okay, and now is that going to happen overnight? No, absolutely not. It's going to take years, decades to develop. Okay, probably on my timeline to get past the 50M mark. I think that's probably going to take probably 30 to 40 years. Okay, and I'm completely okay with that. All right. So long-term investments here, guys, right here. Okay. This is our insurance policy here. This is the hedge we are forced to use. We cannot use bonds. We have to use volatility currently. Okay. So this is our keep you safe policy. Okay. Copper and Bitcoin, because that is the best fiat currency deflation hedge that exists today. Okay. So that's the safe alpha portfolio. Okay, and these numbers have already picked up, right? But we'll just call it 8.5% for the first month of January here, and the S&P 500 once again is down at negative 0.06%. Okay, so that is that portfolio set here, guys. Let's take a look at the Absolute Alpha Bootcamp. So this is our most aggressive strategy, folks. Okay, so just note that this one will have some more volatility involved with it, right? But you got to be willing to stomach a little bit more volatility to take a larger gain into the stock market. Okay, so I'm going to use purple here to highlight these gains. This, guys, is running at a let's see here, our overall P&L for the year is $18,165. That's on just a $100,000 account when we started it. So we're up well over 18. We'll just do it here to the tick, 18.27% for the year here so far. And once again, that is an outperformance factor to the S&P 500, well, of 18.2x. Okay, so pretty incredible. These assets will grow faster. Jason will cover that in just a moment, guys. And just wanted to talk about that real quick. Now we do have our pro portfolio that's up over 12%, and that's our most conservative strategy that our multimillionaires really, really love. Okay, so just real quick on that, guys, wanted to show you that, and then just want to encourage you to save my number. And if you're in the presentation now, if you want to send me a text and just say, "Hey Dean, it's Ray," or "Hey Dean, it's Tom," or "Hey Dean, it's Jay," or "Hey Dean, it's Crystal," feel free, guys. That's my direct cell phone number. Look forward to communicating with you. Okay, so with that, Jason, I'm gonna go ahead and hand it over to you, bud. I think we did enough drawing on the screen here.
Okay, cool. I'm going to go ahead and unmute Jeff, and I'm going to put up a screenshot. Dean, can you tell everybody a little bit of the story behind this?
Yeah, absolutely, Jason. So guys, the whole point of our free trial is to help you generate some gains, right? And our intention is to help you make more money than the cost of our service. Okay. Now, some people like to paper trade, and that's fine. They don't make the money, but some people like to use real money and really start growing their capital because they understand how smart risk parity is and how we are eliminating risk, right, from your investment. So, a gentleman named Ron, a really sharp fellow. He's up in Wisconsin, very successful gentleman. It was really interesting. He was watching us on YouTube previously. He wasn't a client, but he was watching our YouTube channel, and he called me one day and he said, "Dean, he was like, what you guys do is so smart." And he's like, "You guys are just like these hedge funds that want to ask me for $5 million up front, and that's their minimum that they take to go work with them." He said, I really liked you guys because I could put in whatever amount of money I want to start with." Okay, and so Ron started with 584K. Okay, on his free trial. Okay, he knew that what we were doing was safe. He understood what risk parity was. Had a good general understanding of the market. Ron's a hilarious guy. I think he has like $5 million in physical gold. Really cool guy. That excited to meet Ron in person when we can. But guys, he actually put up 584K, like I said. And as you can see here with that green arrow, he made $97,019.89. This is no BS, folks, right? We let the BS walk, we let the money talk, and here's the money. Okay. And this is his actual screenshot from TD Ameritrade. And it was really funny. Ron's a character. He randomly texted me one day and he said, "Hey, Dean, check your email. I think you're going to smile." I go, what in the world is he talking about? So I go and check my email, and this is the screenshot that Ron sent me. Okay. And it was crazy, guys. This is during the biggest sell-off week in Q1 of 2020, right? So if you're scared to put money in the market, hey guys, I get it, right? You see that, every service-based business in the United States is struggling, right? Really the lower class and some of the middle class is absolutely struggling because of that. But you see these markets just rocketing, right? And you probably don't understand that, but that's what we're here for, and that's what you pay us for as a service fee. Okay. So, anyways, long story short, Ron knew that there was some risks in the market, and he said, "Gosh, I love how you guys are set up. This is really cool." He put some money in behind us, like I said. And during the worst sell-off week, folks, in Q1 of 2020, he made a nice 7,000 profit. I'm not kidding you guys, his girlfriend that had over 3 million with Goldman Sachs that same week, okay, had a drawdown just shy of $1 million. Okay, this is with professional money management with Goldman Sachs. They're one of the best out there, right? With money management. Yeah, it's what it is. But it was kind of funny because he was bragging to his girlfriend, and he ended up taking her to down to Florida to celebrate after that week. Anyways, Ron signed up with us. He's now one of our pro members and has a pretty substantial amount of capital behind us. And hopefully at some point he fires the Goldman people and gets his girlfriend behind us as well. I'm sure he's getting closer to that every day at this point. All right, guys. So that's that, Jason. Couple more recent awesome just conversations I've had, guys. So we now have 5 people that have made more than $40,000 during their free trial. Okay, and then we've just crossed 300 people that have made anywhere from $1,000 to $20,000 with our free trial. Okay, so the point, guys, here at Portfolio Builders, let the BS walk and let the money talk. And with that, Jason, I'm going to go ahead and hand it back to you, bud.
Also, I want to point out this testimonial was actually in March during the huge stock crash. And what I want to do is contrast that with Jeff's story. So Jeff, are you out there?
Yeah, I'm out here, yes.
Jeff, tell your story, the good, the bad, the ugly, how you met us, and what kind of you were experiencing in March compared to this guy, and then what your results have been so far with us.
Okay, sure. I like telling this story. Good morning, everyone. And as I was listening to the intros, I think it was someone named Joseph that mentioned losing money, lifetime subscriptions. Forgive me if I get the name wrong, but I felt his pain. So I started investing in about 2008, and for 10 or 11 years, I just treaded water with the devaluing of the dollar and inflation over that time. I really got nowhere. And then came the Q1 of 20. So when Ron was doing his trial and he's making 100K and taking his girlfriend to Florida, Big Dummy Jeff is up here in Denver every day thinking tomorrow's going to be better, and it wasn't better. And I slid all the way down. I rode the roller coaster all the way to a 40% loss of my trading portfolio. So is pretty bummed. And Ron's celebrating. I'm up here. I went dark in Denver for about, I don't know, a week or 2 weeks. I went to cash and I licked my wounds and I decided I got to jump back in. It's funny. My wife and I always say to each other when something bad happens, toughen up, where she says, rub some dirt on it and get back in there. So that's what I did. And I got back out there and I found YouTube, or on YouTube, I found Portfolio Builder. And then I found Dean. And I didn't have very much money, so Dean was quite kind and quite flexible with me and allowed me to get into what was at the time a different program, but it's the same as what is today as Safe Alpha. That's what I joined. I started slowly, and I started learning about this thing called hedging for risk and risk parity. And I had really, guys, and over those 11 years, I was thinking this morning, I bet I spent $20,000 in subscription fees, just subscription fees, not lost money because of them, but just the fees. In fact, just as about a year and a half ago, I joined 2 live trading, meaning where you sit in front of your laptop and you try to trade with these guys. And I started to realize I could never hit the entry points. And I started realizing it was BS, and one of them turned out to be Raging Bull, which got fined, and I took that as a complete loss. I started putting all my money behind, or not all of it, but more and more behind Portfolio Builders program. I moved into the next program, which is the SAFE, the Pro Growth, and I really enjoyed it. And I was doing better and better. I asked if I could make a lifetime program of that. I did. Things kept getting better for me, and I joined the boot camp last June as a lifetime subscription holder. I did not have the money for it. Didn't have it at all. In fact, I sold stock to pay for the entire thing. I did not tell my wife. I looked at that moment as one of those, ask forgiveness and not permission if you get caught. She does know now, but it took a few months before I actually told her. So now I get to sit back with these guys. I'm all in. I push my chips all into the center, and now I'm hedged. The last 10 months I've been with the program, I've been hedged anywhere between 10%, and today as we talk, I'm at 24% of my tradable value, and I get to sit back and listen to Jason 3 or 4 days a week and about world economics and world politics, and I get to see how his decisions are made and how his picks are made, and I get to watch my portfolio grow. I built such a good relationship with these guys that I'm pleased to say I joined the team officially, but now my trading portfolio, since I've been with these guys in 10 months, I was down 40%. As we talk, I guess it was a day or two ago, I actually haven't done the math today, but I was up 52% back growth. And so that's pretty much unheard of. And I'm just happy to say it's all real. It's all true. And I'm looking by the next few months to get my 100% back, and then I'm off and running. And so it's a great story that has a pretty good ending to this point.
Hey, and just to clarify to folks, Jeff is using our Pro portfolio, and he's also using our Absolute Alpha Bootcamp. So he's using our most conservative and our most aggressive portfolios. Jeff, what was the month that you started working with us in 2020?
I found you guys mid-March, and I started working with you, I think it was end of March. Mm-hmm.
Okay, great. And in Europe, as of the close yesterday, 52%?
52% of my total portfolio. And I just looked today, I pulled up my Thinkorswim, and between the portfolios, and this is just a raw number real quick, I'm up 3.8% today because of the GBTC.
Nice. Beautiful, Jeff. Very cool.
Yep.
Thank you, Jeff. Really appreciate that. Hey, pass across for a reason sometimes. I love it.
Wonderful. Okay, great. So there you have it, guys. We've got risk parity, and we're going to teach you all about it. And hopefully you can make some money in your free trial and then join me in my premium webinars. So what you're going to see today is kind of the 10,000 foot overview. And then if you do join the premium program, What I do for our clients is create customized portfolios based on your circumstances. So I'll look at how old you are, how much income you have, what your needs are in the future, what your time horizon is, what your risk tolerance is, and I'll say, you know what, maybe 80% in this portfolio, 20% in that portfolio. Let me screenshot it, get it out to you, and you're set to jet. And so that's really one nice thing we do once you become a premium member. And then the other thing we do is really dive into the details. So I'm going to give you the 10,000 foot overview. So kind of looking out into the stars with the telescope, but if you want to pull out the microscope and zoom in and see what's really happening underneath the surface, that's what you'll get in the evening webinar. So excellent. Let's go ahead and hop into it. I'm going to tell you guys a few important news briefs every morning too, so you have reason to come back during your free trial. This is another thing I predicted. I predicted by the end of January that the hospitalizations would be falling off a cliff and we'd have all the reason to reopen the economy. And that's going to be really important for how to play these markets. Because if we were to stay locked down and keep all this crap going on for another year, I'd be more in the deflationary camp. Okay, but that's not what's happening. And just like magic, election's over. So what do you know? Pandemic's over and everything's reopening. So that's going to be critical for predicting the future and how to place your bets in Wall Street here. So that's exactly what's happening. I was actually anticipating we would go no higher than 130,000 hospitalizations, and that by the end of January, it would begin to fall off a cliff. And that's exactly what's happening. So let's take a look at how our portfolio is designed, how to follow it. And I want everybody to get a paper and pencil out right now, copy this down. Now remember, you have a copy of this in your email too. This is how you're going to test drive the portfolio and see it works. Okay, so this is what everybody needs to do right now. Just don't wait around. Do this right now. Here's how you read the trading plan. Okay, we got a defense. We have an offense. The defense is going to defend you against, okay, and I'd really simplify your mindset about the markets. We're either in a deflationary environment where the economy is contracting and slowing down and earnings and profits are going to collapse, in which case the stock market falls for a little bit, and we'll talk about that. Or we're in an inflationary period where the economy is growing and expanding and the velocity of money is getting faster. People are spending money quicker, creating that higher GDP growth. Okay, so I'm going to tell you right now we're in an inflationary era, and that this is exactly how you want to be positioned to make some very, very handsome returns safely with very little work. You're going to see we do very, very little. We're not a dog chasing its tail. Okay, I like to think of our group as farmers. Okay, so we're building a garden. We're carefully maintaining our garden, and it produces food consistently all year long. Okay, so if you get hungry, you can go cash out a unit of investment and go spend that on whatever your heart desires. Otherwise, what we're really going to press upon you is you want to get your money out of cash and into units of investment following our program. It's the only way to protect your wealth. I'm going to also show you that owning cash is the single stupidest idea that you could possibly have for 2021 to 2031. Okay, I'm going to repeat that. You're probably going to lose 10% or more of the value of your money if you stay in cash. And if you're in bonds, realize that's a leveraged bet on the future value of the dollar a decade, 2 decades, and 3 decades into the future. And spoiler alert, I can tell you exactly what's going to happen to the value of the dollar in a decade, 2 decades, or 3 decades. It's going to be worth far less, way less. Okay, so hopefully by the end of this webinar, not only will you build our portfolio, you're going to begin to scramble with fear to get out of cash. Okay, we really want to impress that upon you. So here's how you're going to test drive the portfolio and see that we're the real deal. Step one, and I'm going to go through these ETFs in a little bit, but let me just walk you through it. Step one, buy 11 shares of the ETF UVXY. This is a deflation hedge. Okay, we don't need to get so fancy. Call it crash insurance. You've got health insurance. you've got life insurance, you've got car insurance, you got house renters insurance, you got all kinds of insurance. Do you have any insurance protecting your retirement? If you don't, our clients do. Okay, we sit in this portfolio at about a 10% insurance policy at all times. And if I thought we're heading into a deflationary environment, I'd be upping that insurance dramatically to probably 30 to 40%. Okay, so we can actually make massive amounts of money on stock crashes. That's just not what we're predicting right now. So right now we're just going to play it safe. We're going to get 11 shares of UVXY. That's your first step. Step 2 is going to be to buy 8 shares of the triple Q. That's TQQQ. Now I'm going to show you what's under the hood of the triple Q in a minute. You probably, if you've made any money this year, own a lot of the stocks inside the triple Q. What I'm going to show you is this product will outperform the return of buying the stocks outright 18 times faster. Okay, so that's right, 18 times faster. We can cut our exposure to the best companies in the world to just over half our account and end up with 9 times the return of someone who is 100% invested in stocks. And that's important because we want to use the rest of the money to defend our growth stocks. Okay, this whole strategy, think of a chessboard. This is your king on the chessboard. The queen is UVXY, and the rest of the pieces are really going to be COPX, defending against inflation. That's really my biggest fear for clients in the next decade, is inflation gets out of control. Okay, so you buy 8 shares of the triple Q. You're going to buy 2 shares of GBTC. That's Bitcoin. Now, if you can't get Bitcoin in your broker for whatever reason, the alternative is to buy silver, AGQ. Okay, so we can cover that, especially in the premium webinars if you do upgrade. And then the final play is protecting against inflation. There's 2 real ways to protect against true inflation. And that's either going long silver, or copper or oil. That's the 2 best ways to express that you think the cost of everything is going to rise in the future. And so growth stocks don't particularly like too much inflation or rising interest rates on bonds. So the ultimate way to protect your triple Q position or your tech giants is to have 2 main hedges at the same time. So you can see I have a large UVXY position protecting against a slowdown in the economy. And then on the other side, if we get a red hot economy, which is what I'm anticipating, we want to be long copper. So we have COPX. You build both of those hedges, you're protected in both directions. Okay, so again, to follow the trading plan, let's say you want to test drive it with $11,000. So I can just come here, punch that in, and voila, it's going to multiply everything into 10 units. So with $11,570, you'd be buying 110 shares of UVXY, your crash insurance. You're going to pick up 80 shares of the triple Q. That's the main powerhouse that's going to deliver the good gains. We're protecting against a currency war currently underway with all major economies devaluing their currency. And it's not going to stop anytime soon with GBTC. So we're long Bitcoin. If you don't want to be long Bitcoin, silver does the same job with AGQ. We're going to protect against a red hot economy that will create rising interest rates on bonds and inflation by going long copper, COPX. So we have all bases covered. We have 4 uncorrelated assets, and we're highly diversified. We have no business risk in a single company. This is the way you want to play this year. Okay, guys, this is going to be a really nice way to play this year. And it does help that copper is really the single most important ingredient in creating batteries for electric vehicles. So if you listen to Elon Musk's shareholder meeting, which was 2 days ago, he says the single sticking point, the single clog in the manufacturing process is creating enough battery cells. That's the single thing holding back that industry. And we got Biden trying to take all the federal vehicles, make them electric vehicles. That industry is about to explode. Plus, we've got all the globalists who've convinced the world that we're going to overheat planet Earth, overpopulate planet Earth, and destroy it unless we get carbon emissions to 0. So they're going to force They literally are going to force everyone out of old school cars and into electric vehicles in the next 30 years or less. So copper most likely is about to have the best return it's ever had in the history of owning these copper miners. They are really set to jet, and they can't find it fast enough. Okay, so really beautiful combination of assets. Let's dig into the 10,000 foot overview of why we're so confident in this exact setup. So first of all, we're not trying to pick stocks. That's really a foolish thing. Why would you do that when you don't need to? You can get a really nice return just looking at the richest people on the planet and copying what they do. Okay, so you're going to see that the owners of the stocks we're going to put you into happen to be the top 10 richest people in the world. That's where they store their wealth. Okay, so Forbes needs to update this. Elon Musk is now #1. But we got Jeff Bezos with Amazon, Bill Gates with Microsoft, Mark Zuckerberg with Facebook. Warren Buffett is pretty much all in on Apple. Apple's actually expecting to accelerate profits this year. So just $2.4 trillion market cap, just insane. We got Elon Musk, we got the Google buddies. Really the only ones in here that are not part of this ETF would be Walmart. And I wouldn't be surprised if Walmart somehow figures out how to convert into a tech company and join the NASDAQ. I'm only kidding. Okay, so let's look at what's in the triple Q. We have Apple, 13% position, Microsoft, 10.5, Amazon, 10, Facebook, 4, Google, 3. You combine both, it's at 7. You got NVIDIA, Tesla, Comcast, and PayPal. That's going to represent half of your most important position in our portfolio. Now, again, you may already own these stocks. That's okay. It's not a bad return. Obviously, those are the best performing stocks in the last 2 decades. But I'm going to tell you, if you make one little change and buy the ETF we recommend and dump these, you're going to generate profits 18 times faster, which is going to allow you to cut the position in half and build out those important hedges to protect your portfolio. Okay, 18 times faster. Let's see it. So look at this. If we bought the NASDAQ, this is the QQQ. This is essentially like buying those stocks and doing it one at a time. This would be a return. And I want to point out, 2008, we had a similar crisis like March, where the stock market crashed and the government reacted by printing $1 trillion a year for about 5 years. The printing, can anybody guess when the printing began? It began right around here, but the stock market bottomed when they announced it. All they had to do was announce it, and the stock market ramped up. Okay, so what I want to show you is if you bought the stock market at an all-time high right here in March, which is when the triple Q began. I'm going to zoom over to here. Okay, so let's look at the return you made if you jumped in right at March at the all-time high. So we're looking right before it pulled back. Okay, so we buy at the all-time high in March of 2010. Why? Because we know the government's in a period of quantitative easing. The very first thing that happens is it pulls back a little bit right after you bought it. But you know the big picture is the government's about to devalue your currency. You need to buy inflationary assets that become more scarce over time. And what's cool about stocks, especially this group of stocks, is they're not like normal companies. Apple, Facebook, these guys are plowing $24 billion a quarter into buying back their own stock. People don't understand, what does that mean, buying back their own stock? That means they're burning the number of outstanding shares. They're making the shares available of these companies more scarce over time. Okay, so that's really going to be the secret to making these stocks go up constantly. You got the government devaluing your currency by printing trillions of dollars that are new every year, making the value of each dollar worth less over time. And then you got these corporations who are borrowing at near 0%, and then they're buying back their own stock to the tune of $24 billion a quarter. Okay, so the stocks are becoming more scarce, driving the earnings per share higher. And then at the same time, you got your government ruining the value of the dollar. And it's not just the US, it's every government worldwide. Okay, so that's what happens when you let the government control the money supply. It's crooked as hell. So if you bought the stock, sat back for a decade at all-time highs, you had a little pullback right after, who cares? You sat back, you made 545%. Okay, not bad. You turned $1,000 into 5,400. Not bad. Let's do the same exercise, buy at the exact same time, but let's use the triple Q. Okay? Every $1,000 invested at the exact same date is now up to $99,000. Okay, so you turned $1 million into 99 million with one single trade. Now, again, we don't want to just buy this outright. It's 3 times leverage. So if you buy a 3 times leveraged ETF, every $1,000 you put into the market now becomes $3,000 of stock exposure. So you think that the 500% return would turn into 1,500 because it's only 3 times the leverage, right? But that's not true because you're compounding these profits every day. And as that goes on for a long period of time, you can see the difference. Instead of making a 500% return, you make a 9,800% return. So we can put a lot less money into this stock and then use the rest of the capital to defend against risk. Now I'm going to overlay the VIX, and look what happens. Stocks go down, VIX goes up. Okay, that's crucial because we're about to look at the product that gives you exposure to the VIX with leverage, and that's UVXY. Okay, so just look at March. You didn't have to predict like we did that there would be a global shutdown and this would panic the market. And you can see it went from 1023 in February, where everybody thought stocks were invincible. We had a historic trade deal with China, which we thought was BS because we knew this is not what China wants to do, and why you saw global corporations team up and get that Mr. Trump the hell out of Dodge because they don't want to mess up their business models. And boom, you end up with this extreme panic in the stock market. UVXY went from 1023 to as high as 135 in less than a month. And again, you didn't need to predict this. That testimonial you saw was during this period. We did predict it. But if we had not, didn't matter. As long as we had the hedge, you made a massive return. If I throw on the percent basis and go to a daily view and zoom in on this, you can see you topped over an 1,100% return. Just amazing. So that's our crash insurance. That's one of the reasons we're up so big in January. We have a huge crash insurance play. UVXY's jumped 30%. Okay, so that's part 2. Okay, next thing you got to understand is what is causing the government to devalue the dollar, and is it going to speed up or slow down? Okay, so let's check this out. This is the deficit of the government. That means we're spending more money than we make. Let me ask you this. Does it look like we're going into a period of austerity where we spend less than we make? Or does it look like we're about to fall off a cliff and spend trillions of dollars we don't have? Okay, the Democrats are in charge. They're going to spend trillions of dollars they don't have. Okay, and the Republicans would do the same, to be fair. They're looking at a $2 trillion stimulus coming up into the next 60 days. They're going to give everybody $1,600, which will go straight into call options on the stock market. And then they're coming in with a $5 trillion climate change oriented infrastructure project. So the big picture is the government's going to spend a ton of money it doesn't have. Here's another look at it. So we're looking at the budget of December. Here's a breakdown. This is a better month than normal. We collected 346 billion in receipts. We spent 490 billion. Okay, and the truth is the US government has promised $100 trillion worth of future liabilities, mainly in Social Security, pension, all that good stuff. So the bottom line is we're not just going to spend more money than we have at the same pace. We're going to be slowly but surely expanding it. Here's a month-by-month breakdown of the deficit. And the brown line, the bigger the brown line, the more the deficit. So the bottom line is brown lines equal money printing. Okay, it means you're borrowing money we don't have. And right now we're printing the dollars to create the loan. And this is going to go on for eternity for the United States. It's just really sad but true. That's what the voters demand. So how does this all work? Well, we go to the Treasury and we can go sell all sorts of debt products. And so we got bills, notes, and bonds. Who buys this stuff? Well, the primary dealers do. Here's a list of the primary dealers. These guys get a really cool deal for them. JP Morgan is probably the biggest buyer, not probably, is the biggest buyer in the United States. And they actually have to buy all unwanted debt. So whatever we can't sell to central banks, primary dealers have to pick up the full tab. So what happens when the economy gets crushed? Same thing in 2008, 2020. Central bank cuts rates to zero. This means primary dealers can borrow at 0% to exclusively buy US debt. And that's what they do. They go borrow for free, buy up all the debt, then they go sell it to broker dealers, pension funds, hedge funds, anybody who's stupid enough to buy US debt, which is a lot of people. They look at it as a way to have access to dollars to run their economies worldwide. The unwanted debt is where the magic happens. So whatever debt they cannot sell and don't want to hold on their own bank's books goes to the Fed. So literally the Fed lends JP Morgan money for free. They go buy up all this debt. They then in turn sell about 2/3 of it right now, making billions of dollars of profits in transaction fees every month. And then what do? They turn around and sell the unwanted debt back to the Fed for another profit. And that's when you see quantitative easing go into full effect. That's what's expanding the credit of the United States dollar, and it's essentially devaluing the dollar. So get this, what took 200 years to get a balance sheet of $4.5 trillion, we printed 3.5 in 6 months. If you like the stock return from 2009 to current, realize that was $1 trillion a year for 5 years. Now you might think we stopped right here. That's not true. China and Europe started printing at this period. Okay, so these central banks are all in cahoots. They take turns printing money together. So it's like passing the baton. China did massive money printing right when we slowed down. And you could argue that the powers that be wanted to crush the economy when they did this policy of raising rates and doing quantitative tightening, because the agenda was anti-globalization. It was a big problem. But that immediately created a worldwide stock crash, so they immediately capitulated and began printing once again and going back towards zero rates. And here we are. Now we're printing money at 5 times the pace, faster than any other period in time. And they're on track to doing 1.5 to 2 trillion a year for the foreseeable future. We're going to talk about when they're going to slow this down. But the bottom line is not until the labor market's restored. I'm anticipating it's going to take 5 to 10 years to recover the economy from the collapse we created by shutting the world down. 5 to 10 years minimum to really get back to where we were. Okay, look at the purchasing power of the dollar over the last century. Outside of the Great Depression, where we essentially collapsed Germany with reparations post-World War I, Europe was in a decade-long depression. America didn't really feel the pain till 1930. But outside of that, the dollar has never gained value. Okay, so it took a European 10-year depression to make the dollar go up. Other than that, the dollar has lost value consistently, 98% in the last century. Really sad. And then just think about what has gone down in price. Absolutely nothing. Nothing has gone down in price. So here's rent up 350% since the 80s. Medical's up 550%, same time frame. College is up 1,600%. Government guarantees those loans. Of course, the cost is going to go up. What about electricity? Just to keep your damn lights on is up 1,000%. Okay, so what kind of world are we living in here? And if we go back to the old CPI model, the Fed will tell you there's no inflation right now. We all know that's totally bogus. The true inflation of things we actually buy is at about 10% and rising. It's likely going to march towards 12 to 15%. That means $1 million today will be worth 900,000 next year and $500,000 in 5 years. So what quality of life will you have if you stay in cash? Not much. And it's not just the United States. Here's Europe. They just printed $2 trillion to start this off. They're going to do $1 trillion to $1.5 trillion per year. Japan, the third largest economy, did $1 trillion. China doesn't have the free trading currency nor the bond market to do typical QE. So they just expand the credit lines for their internal economy and devalue their currency. So the credit impulse, remember I told you China went on a printing spree in 2015. Here it is on a chart. They're back to that level of printing right now. So bottom line is every government worldwide is printing money. And the Fed's told us when they're going to stop. They want to get this core inflation rate, which is what they base their models on, to 2.5 and keep it there for as long as it's below 2. So already we've been below 2 for 9 months. I don't think we're going to get to 2 until the end of this year. So they might be running the economy hot for a year or two once they finally get to 2.5. So I'm anticipating about 5 to 10 years of massive quantitative easing and low interest rates. That's how long it's going to take to restore the labor market, which will in turn create the inflation in the economy. So until this runs hot, you need to bet up on the stock market and hedge with UVXY. And once we do get to those targets, we can start to invest in US Treasury bonds. But that's a long ways out and probably a lot of pain for Treasury investors right now. Okay, here's a look at the dollar against other currencies. This just shows you we're printing money faster than everyone else, which gives US stocks an advantage. Okay, so they can get away with this for much longer. They could push this all the way down into the 76 to 85 range. No problem. And they want to because it makes the cost of our debt burden decrease. They're devaluing our debt burdens and our liabilities to Americans. Okay, it's going to make our exports explode. Okay, so a lot of reasons why they want to devalue the dollar. Okay, so bottom line is we think that the TLT, this is the 30-year bond market, it's about to crash to this 115 to 125 level, and then that'll be a big pivotal point in the market. That's when we're going to go long bonds and do the typical risk parity. Until then, you're really being forced to buy stocks, commodities, and precious metals because everything else is going to lose value rapidly. We're looking at a 35% crash in bonds in the next year or 2 or 3, depending on how much the Fed wants to slow down the crash with quantitative easing. They can always ramp it up. And then we're anticipating about a 10% devaluation of the dollar compared to the cost of goods and services per year for the foreseeable future. So what else are you going to do? You have to park your cash in the right assets. So we've covered the charts for the triple Q, why it outperforms. We covered UVXY, why it protects you against any kind of volatility, any crash for any reason, does not matter why. If stocks go down, UVXY screams higher at a far faster rate. Okay, just 2 days ago, SPY was down 3%, UVXY was up 30. Okay, so it allows you to get away with about a 10% hedge and be completely protected against a significant crash. And if I get you to 15, 20, 30% hedge, then you actually make insane profits on the downside. That's just not my outlook right now. I'm expecting the market to skyrocket because we're devaluing our currency. There's nowhere else to bet. So what's a good way to express that you think the dollar is going to lose value? Silver, gold, and Bitcoin are really the best way to do that. We really like Bitcoin. GBTC is the way to do that. And we've been long Bitcoin for quite a while and enjoying the ride. I believe it's going significantly higher. In fact, looks like Ray Dalio is about to go long Bitcoin. Okay, final position is real inflation, real economy. Okay, if the real economy does get hot and labor market restores, everybody's confident spending money, all of a sudden you have all this new printed money fighting over a limited supply of goods and resources in the economy. So it's once everybody starts fighting on the demand side to get these goods and services that we start to get real inflation, okay? And we're going to see that expressed dramatically in the price of copper and oil. But right now we like copper the best because we're headed towards a global synchronized climate change agenda that's going to really create massive demand for copper. So that's your inflation hedge, but it's also a greedy play. Now, here's a great way to predict whether you have inflation coming. And look at how high this level can get. I think we're going to see another massive move like this, which means copper is going to skyrocket. But we can see it's already forming. Copper's rising far faster than gold. This is predicting inflation incoming. So you want to be long copper miners and stocks, really, with this prediction. Now, Freeport-McMoRan is one of the stocks in the copper miner ETF. We like to have a basket of stocks, not just one. You can see this puppy went from as low as 8. In fact, it went below 8 and traded all the way up to 64. And this is before electric vehicles were even really a thing. This next bull market for copper is going to be absolutely insane. So I highly recommend you get that position. But just the last run up was a 400% return. Now, if we fast forward to today, we can see this absolute bull market's already beginning. People already see what's coming. And so from the low of March, it's currently up 300%. It's just getting started. This is going to skyrocket. Okay, it's nowhere near its recent highs. And this is the inflation hedge. Okay, so we got a big sell-off recently. This is a great day to buy that. What keeps us up at night? Okay, so we're actually thinking the 10-year and 30-year interest rate's going to skyrocket to 3. And then that will be a pivotal point in the stock market to go long bonds and take a lot of profits off the table. So that's exactly what we're planning. We're actually going to get ready to short the treasury market until that happens. So this is going to be a very important hedge in future trade alert coming out soon, but we're waiting to pull that off. And again, what else would make us really scared about this strategy? If we get runaway inflation like the 70s, then we can start to talk about a more bearish long-term view of the market. But we're not there yet. We're really not there yet. We're still facing deflation. Look, do you see a lot of inflation? I sure don't, at least according to the Fed. This is what they go by. So the only period of time where you really had to be worried about a long-term stock sell-off was that hyperinflation decade. And you can see you had a 15-year bear market. So don't worry, we understand that. We're going to be on top of that and navigate you through retirement and avoid any kind of downside risk. We actually have a great track record of predicting stock crashes and making lots of money during it. Okay, very good. That is the overview. I'm going to go ahead and put it back on the trading plan. And let's go ahead and open up for Q&A and see who wants to get their portfolio built. And then Dean, if you're back, let me know. But until then, I'm going to go ahead and take questions from the crowd. So I'm unmuting everybody. And what we'd like to do is see if you understand how to build out a model portfolio and start test driving the system. See it work with your own 2 eyes. Okay, so let's see. Live, we have Crystal, James, Jay, Jeff, Joseph, Lily, and Tom. Any questions out there? Who wants to build out their portfolio? Don't be shy. If you have any questions, we'd love to chat with you. And that's really the best bet, is build out your portfolio, see it work, and then you can scale up when ready. All you got to do is write down 11 shares of UVXY, 8 shares of the triple Q, 2 shares of GBTC. If you can't buy that, buy AGQ, that's silver, and then buy 6 shares of COPX. This is our most confident strategy that's super easy to build for you to see results and gain confidence in our product.
Very nice, Jason. And I did post a screenshot in the chat too, so everyone can just click on that, just in case you don't have a pen and paper handy. Okay.
And there you go, Joseph. If you want to jot that down right there, okay. There's your 12,000 portfolio. And you got 100 grand in the bank. Well, if you want to go bigger, this would be it.
Yeah, Joe, and that's something I'm doing, bud, every month, right? And you got to keep your, for me, what I like to do and recommend, right, is keep your 1 year nest egg right in the bank, so where you can cover all bills and all costs for you and your family. And then outside of that, Joseph, literally every single month, I aggregate my extra income, put it right into the market. Okay. And here you go, Joseph. I'm sending you that screenshot too for 12K. Yeah, but up to you. I would just, outside of that number, I would absolutely. We've got a pretty significant pullback. This really started Friday last week, and this week, me personally, if I was in your shoes, I'd be investing definitely the extra cash you have today. Okay. Very good. Okay, cool. Okay, let's see here. And Jay Lim said, are these ETF proportions out equally based on the market movements, or do you need to adjust it every day? No, Jay. You simply the only thing that's really important here is the ratio of shares. Okay, and Jay, how much would you like to? And Jason, Crystal wants to do a build for 5K. Okay, I'll screenshot that really quick and send it to Crystal.
You want to just jot that down, Crystal, on a piece of paper? You got 48 of UVXY, 35 of the TQQQ, 9 shares of GBTC, and 26 shares of COPX. So I'll leave that up for a minute so you can jot that down. And next I'll do 25K for Jay. Crystal, post when you got that jotted down, okay? And then I'll put up the screen for Jay. Okay, she got it. Excellent. All right, this is nice. All right, Jay, let us know when you get that jotted down. This is your formula for success.
Nice. Awesome, Joseph. Beautiful. I tell people, look, don't hold that TQQQ ETF. That's a wealth maker. Okay. Okay, look. Very good. All right. Let's see here. Who else do we need? Lily and Tom. We need to get you guys built out as well. Nice. And our pleasure there, Crystal. Crystal's in the Sacramento area. Let's see here. Joseph and Maine's going to test drive it with 12K. And then once he's confident, has more he can allocate. Beautiful, Joseph. Yeah, good pullback. Good pullback here to buy into, guys. Really good. Awesome. Okay. Tom and Lily, go ahead and post the amount you'd like to use. James, you as well. And then once we get James, Lily, and Tom, we'll have everyone built out. Okay, cool. Jay's going to test it on paper. Cool, Jay. I wouldn't do that if I was in your shoes, but I definitely understand your philosophy though, too. And that is a great way to gauge it. Okay. With this pullback, guys, it's a killer opportunity. Right. Okay, cool. All right. And so we just need James, Gailani, I think, Lily, and Tom. Okay, looking good, guys. All right, so we have Jay Limbs doing 25,000. Joseph's doing 12. So Crystal's doing 5. All right, we just need James, Lily, and Tom. And guys, if you're shy, just put it on paper, right? Don't waste your free trial. I have people ask me all the time, "Hey, Dean, can I get another free trial?" No, absolutely not. Okay, guys, we offer one. Our time is way too valuable to sit there and offer people free trials constantly. Okay, very good. Okay, Tom says 25K was good for me. Is that spreadsheet available? No, Tom, we don't have that spreadsheet available. That is something internal within our company. Okay, great question. Okay, but once you write it down, it doesn't matter, right? You have your share ratios, and then once you're a client too, Tom, you will have that access each day in your trade alerts. Okay, very cool, and that will come to your text message and your email both once you're a client. Okay. Very good, guys. All right, Jason. Any other things to say today here?
No, sounds good. I'm gonna get ready for the evening premium webinar. So if anybody does join the real deal, we'll be zooming in on all the details. Otherwise, build out your portfolio, see some results, and I look forward to meeting you in more with our paid premium group, so you can meet all the other clients following the same trading plan.
Okay, great. And Crystal posted, she says, I've been using E-Trade and Robinhood. Of course, you had me worried about Robinhood. Is it difficult to move my share from Robinhood to E-Trade? Give them a call. Give E-Trade a call, Crystal. I think you're probably going to have to liquidate the Robinhood account to transfer it to E-Trade. I'm not sure, but call E-Trade. They'll definitely let you know. But yeah, E-Trade's much more reputable than Robinhood. I am always shocked by how many people use Robinhood. It's such a piece of junk, and it fails every time that there's a lot of market movement. I would never ever put money behind that thing. Okay, very good. Okay, and James says he has a quick question. Okay, great, James. How can we help there, bud? And my pleasure, Crystal. Great question. Yep. So yeah, guys, and the only broker we recommend is TD Ameritrade because they have the best level of customer service. They have the most flexibility for vehicles to trade. Best platform, best mobile platform, you name it. There's basically no reason not to have it. Okay, looking good. Okay. James is thinking about using a bit of margin on this. Okay. So James, realize your assets already are using margin, right? So they're already leveraged, but if you want to take on a higher level of risk, you certainly can as well. Okay. Not something I recommend, but if you want to do that on a personal level, go for it. Okay. Nice. And James, how much were you think of starting with, bud? A couple 100,000, or what did that look like for you? Sure. Okay. Cool. Very cool. And how much were you thinking of testing on paper there, James? Okay, 500K. Cool. Perfect. We will screenshot that for you here real quick. One more zero there. There we go. Okay, looking good. All right, and I will send that over to you real quick there. Okay, and once again, guys, don't worry about the cost. Okay, cost is absolutely irrelevant. It's all about the ratio of shares. Okay, so I'm gonna send that to you, James. Okay, Lily, I think you're the only one we haven't heard from so far. Okay. Yep. Absolutely, James. Yeah, that is a awesome position. Okay, yeah, don't mess up our ratios, James. That's gonna you're gonna fail if you try to do your own system. So I would just follow what Jason does. That's why we're outperforming the market. That's why we have over $100 million behind our portfolios. Okay, so yeah, I wouldn't do your own ratios there, James. I'd just follow the plan. That's the point of your free trial, right? Test it out. You saw the marketing video, you fell in love with it. That's why you took the free trial. Follow the plan. All right, guys, looks good. So we are good to go. And if anyone has any questions, just feel free to give me a call, 505-322-7515. All right.
Okay, very good, Dean. Well, I'm gonna go ahead and prepare for the evening class, and we'll talk to everybody soon. Thank you so much. Happy Friday, everybody.
Thank you, Jason. Very nice. All right. Okay. Yep. And James, just use the ratios we recommend, bud. Don't skew it. You're gonna fail if you do. Okay. Looking good. All right. Okay. And hey, Jason already hopped off, bud. So just take your screenshot for the 25, just multiply it times 4 on the share ratios. Okay. All right, guys. And if you want to hop into the afternoon webinar, just get signed up, and Jason will be happy to help you do that. All right. And so we will go ahead and transition over here. Okay. Yep. My pleasure, Jay. Yes. Super easy, right? Just take those share numbers, multiply them times 4, and you are set to jet. All right, guys. So it's really simple, just simple math, right? We build the unit size, just take your total investable capital, divide it by the unit size, you know exactly how many shares to buy, right? Simple, quick multiplication, incredibly easy to do. And let me just show you guys real quick just how easy that is real quick too. So let me go to, let's see here. Okay. All right. That is let me go to Safe Growth Pro. Oh, oops, I'm sorry. Safe Alpha. Okay. So this is what the membership area looks like here, guys, right? So you'll get access to this once you're a client. And then as you asked there, Tom, you'll always have this to reference, right? Okay. So that will always be right here. So you can always reference that. So it's really, really simple, guys. And I guess we need to explain that how simple this is, and I'll do that really quick. So let's just say, let's see here. So Jay wanted to do 100,000. Okay. So very cool. So we just write 100,000 here. Okay. And then what we do, guys, right, is simply take that $100,000 and we divide it by our unit cost. Okay. So we do some elementary school math here. Okay. So that's a little division symbol. Sorry, that didn't look so great. Okay. And our unit cost is 1194. So we divide that by 1194. Okay. To see how many units we build. Okay. Or in this case, how many units that JLim is going to build. Okay. So we take the units here. All right. And I think we always misconceive how really just how easy it is to do this because we've been doing it for so long. And our clients, you know, after they do this once, they really never have questions on it because it's just elementary school math. Okay. But we take this 100,000, we divide it by 1194. Oops, 94. We're going to understand we have 83 units. Okay. So we go over here. We understand we have 83 units. So you take this share number, multiply it times 8. So again, we don't care cost. So 11 times 8, right? And then we have 8 times 8. And then we have 2 times 8. And then 6 times 8. So ultra simple, guys. And then you know how many shares you buy. Okay. Does that make sense to everyone? Joseph, what's the worst return we've ever had? Are you talking annual, Joseph, or what are you referencing? Good question too. I really like that you asked that. Okay. So beautiful. And hold on one second here, guys. Sorry, I gotta look at my phone here for one moment. Okay. Looking good. Okay. So sorry. Okay. 8 times 8, 64. right? Oops, sorry, 64. 2 times 8, 16. And then 6 times 8, okay? And then once we have that, guys, you are all set to go, right? So that's, what is that, 48? Yep, 48 off the top of my head. And that's how you know how many shares of each one to buy. So UVXY, you buy 88 shares. TQQ, you buy 64. GBTC, you buy 16. COPX, you buy 48. And that's how you allocate a 100K. Okay. Okay, cool. Great question, Joseph. So the worst month we've ever had in the pro was a 10% drawdown. Okay, and we didn't take a loss, but we had a drawdown that month. Safe Alpha, the most drawdown we've ever had was 11%. Okay, and best months were well over 12% on both portfolios. So our best months exceedingly outperform our worst months. And then let's see here. So Safe Alpha did 25.31% in 19, did 4 in 2020, and we're already up a little over, I think it was like 7.8% or 8.4% the last time we looked. Okay, let's see here. In the Absolute Alpha Bootcamp, we actually haven't had any drawdown yet since we've started that 3 months ago. That's up 47% now in 3 months. And then the cryptocurrency hasn't had any drawdown either. That's up over 90%. Okay, but those were our newest ones. So great questions there, Joseph. Very good. Okay, guys, and does this make sense to everyone on in the webinar here? All right, so we just do some elementary school math. You figure out how many units, right? So you just take your investment capital, divide it by the number of units, or the size of the unit, I should say. Okay, and then that way you take this 83 units, take the shares, multiply it. Simple math. You know how many shares of each asset to buy. Okay, Tom says perfect. Beautiful, Tom. Awesome, guys. And yeah, that's how easy it is. And then so anytime you, let's just say, you know, a year down the road, you want to go and liquidate, you're going to liquidate $25,000 in profit because you want to go, you know, buy your 16-year-old a car or something like that. Okay. So once again, you just take that number, 25K, divided by your unit cost. Okay. To understand how many units you sell to go buy your 16-year-old a car. Okay, or your 16-year-old grandson or granddaughter. Okay, so you just do that, right? Just simple math again, right? We'll take the 25,000, divide that by 1194. You're gonna understand you're gonna sell, basically I just call that 21, okay? Because it's 20.9, okay? So you can go ahead and round up there. So you're gonna sell 21 units. So you just take this, the share number, right? Multiply it times 21. 8 times 21 here, 2 times 21, 6 times 21, and then you just go exit and go buy the kid the car. Okay, that's pretty simple, guys. And it's, you know, whenever you guys, and I just tell people, look, leave your compounding in as long as possible. Okay, because obviously, you know, if you take it out, you're not compounding. So I just tell people, and a lot of people use our strategies and stuff for income. Okay, and I tell them, look, if you need to do that, try to wait for a year if you can, right? If you can afford to do that. That way, you let your money compound as much as mathematically and humanly possible over that span before you do liquidate. Okay, beautiful. All right, guys. So super simple to follow. Okay, what is not super simple to do is create these allocations that Jason does. Okay, this took us really, guys, to figure out risk parity. Really, Jason and I were fortunate to learn this from a family friend of ours, super young. Okay, and since 16 years old, we started our paper trading. Okay, and so now combined experience, we have 36 years combined experience doing risk parity. Okay, we've studied every single legend that's ever done it. Ray Dalio, okay, and Warren Buffett, they're kind of the people we look up to. I get a lot of questions a lot. People are like, oh, do you watch this person on YouTube? Nope. It's Buffett and Dalio. Really, you want to look upstream, right, not downstream when it comes to investing. Okay, so let's look at the power of compounding, folks, and it's a bit different today. Okay, so compound interest is the eighth wonder of the world. All right, so let's look at the power of compounding. We're starting at the 100,000 today. All right, pretty neat, guys, to see really how fast this starts to snowball. Okay, so we do have the years here. Okay, we do have the total return here. Okay, and I'm sorry, I'm not sure why that went away. Okay, so here we go. The years snowballing here. Okay, the annual return snowballing here. And pretty cool. By year 10, you're growing your money by 186,000 a year. Okay, that is more than let's see here. It's 98% of the households on planet Earth make in a year. That's your money growing for you. You're not working for your money. Your 100,000 start is now a 9x factor. Okay. So pretty neat to see that. Let's go ahead and go to the next slide. Let's look at years 11 through 20. Okay. So we're watching these years snowball and compound as the profits do as well. Okay. But year 15, you're growing at 586K a year. Pretty phenomenal. Okay. Year 20, you're growing at 1.7 a year. Most people can probably live off of that type of structure. Okay. And your total nest egg now is an 86x factor from where it started. All right, so kind of fun to see what 25% a year looks like over 20 years, right? Now, the average return on the S&P 500 is currently 10%, so you need a better strategy than simply own the S&P 500 to achieve this. We're here to help. With the creation of ETFs, this is made incredibly simple and safe, okay? There's literally an ETF you can own to position into all big unstoppable trends, okay? And now, guys, there's an ETF to protect your account too. We're here to make sure you have the right assets during your journey. Now, let's take a look at why Portfolio Builder is different than advisories, mutual funds, and hedge funds. You'll have major advantages over traditional advisors, mutual funds, and hedge funds working with Portfolio Builder. So what are those? Okay, number one, guys, you're going to always have downside protection built into the portfolio, right? If we look back at Warren Buffett's number one and number two rules, rule number one, never lose money. Rule number two, don't forget rule number one, okay? Number two, you will always have control of your capital. You can liquidate without needed. You need to go buy that car for the grandkid, go for it, right? Do the quick math, liquidate your 25K, go get the kid a car. All right, number three, learn everything we have over the past 3 decades, then relay this to family for a multi-generational impact. All advisors and funds keep you uninformed and frankly, want it that way. Okay, this is wonderful, guys, and our wealthy clients just love this. Okay, we have a flat fee that won't grow and your account does. And even if you're a small client now, guys, starting with 25K or 50K or something, guys, when you're growing up to the 250 level, the 500 level years from now, right? Guess what? That fee is locked in forever. It never increases. Okay. So that's flat and you get grandfathered in, even though we'll continue to raise our prices, right, as we go. When you lock in your rate today, guys, you're locked in. You literally have no increase, and it doesn't matter, what type of capital you have, that's locked in for you. Okay. So number 5, guys, we have live interaction with your chief investment officer. This won't be found with any other finance firm, period. Okay. You're going to be able to get in and out of positions faster than the big funds. So you're going to have safety and ROI advantages that will keep you safer and add gains. Now, one thing I actually haven't added up here, really but the learning side of things, guys. Look, it's important to know with the funds, the advisors, right? You're not going to learn anything from them. Okay. They're going to literally, they want to keep you uninformed so you don't fire them. Okay. We're going to teach you everything we know. And you know what, guys, if you go off on your own 3 years from now, right, to build your own portfolios, great. That's awesome, guys. That's a huge compliment for us. Okay. So that's a little bit of the difference, right? So kind of cool there. And we literally look forward to teaching you everything we know. Now, what are those famous rules, right? Rule number 1, never lose money. Rule number 2, don't forget rule number 1, hence having downside protection, right? Put your capital in the tank, guys. Don't put it on a motorcycle without a helmet on, driving down the 5. Drive down the 5 with a tank, okay? So if someone hits you, they're in trouble. You're just fine. What's the number one unknown risk to U.S. investors today? Guys, it's cash in your account, okay? Cash is guaranteed to lose value. I don't care what country you're in. I don't care if you're in the United States. I don't care if you're in Ireland. I don't care if you're in Malaysia. Your cash is devaluing at the fastest rate we've ever seen, okay? So don't let cash be trash, right? Cash is trash. This is a quote from Ray Dalio that I love. It actually couldn't be more true than it is today, guys. And in the United States, we're devaluing it 10 to 15%, depending on where you live, every year, right? And insane. But if you wonder why that stock market is going insane, okay, well, they're increasing the money supply and they're shrinking the supply of stock. Pretty simple to understand which way the stock market's going to move. Okay, and really too, guys, so many people do not understand this, but the richest people on the planet control our federal reserves and our governments. Okay, so they're going to ensure they go from being billionaires to trillionaires. Let's go from whatever level you're at and double your money, right, over the next few years. Why not do that, right? I think you'd be crazy not to, honestly. So did you know your cash is burning up sitting in your brokerage or bank account? Well, why, guys? The Federal Reserve is printing money at the fastest place in U.S. history. And guess what? Even if you're not in the U.S., your government's printing money. Okay, if you're in Canada, your government's printing money at 10,000 times GDP. So you literally just lost 20% of your value of the Canadian dollar last year, and it's probably going to be more like 25% this year. And it's crazy how many Canadians I'm talking to that are millionaires that just have everything in cash, and they're unfortunately they don't know, right? But that's what we're here to help, guys, and that's why our job is so fun. Okay, because we get to teach people what's really happening today. Because most people are clueless to it, right? They're focused on their job, their family, their personal life, right? Their hobbies, right? We're focused on finance all the time, guys. So you don't have to. Okay. Yeah, Joseph says big companies controlling governments is like legal mafia operations. In other words, yeah, just so I wouldn't even compare it to the mafia. The mafia didn't have a tenth of the power that the largest companies on planet Earth have today, and they've bought not only governments locally but internationally, federal reserves too, right? So yeah, join them, guys. We're not going to ever look. I know that I'm not going to go beat the billionaires, right? I'm not going to go beat Bezos and become a trillionaire, right? I know that, right? I accept that. I'm totally okay with that. I don't want to be on the radar, actually, right? So that's totally cool with me. But I'm going to take my family into kind of the 50 to 100 million range before I die, and I'm just going to attach to what they're doing, right? They're going to make sure that they go from billionaires to trillionaires. Hey, well, let's go from wherever you're at now to, to 7 figures, 8 figures, 9 figures. Okay. And seriously, guys, they have full, complete control. They're going to keep continuing to burn the dollar. Okay. And they're going to keep continuing to reward the shareholders. It's really simple. And if you don't think the billionaires are going to do that, you probably should think long and hard about that. Okay. So really, guys, you can leave your hard-earned money in the fire, or you can learn to invest it safely today. Okay. So you guys have that roadmap. Okay. And just real quick, guys, we do have a webinar only special available today. Stay tuned to see the savings you can take advantage of today. Okay. Just important note, guys, there's only 3 spots per day. Okay. So how can we help you and your family? We have 3 portfolios you can build with us today, depending on your goals and risk tolerance. We will cover each portfolio in great detail in the following minutes. Jump in and ask questions during this process to make sure the portfolio is perfect for your goals. I'm going to unmute all microphones now so you can speak directly with me. Okay. And Crystal, you're unmuted. James, you're unmuted. Jay, you're unmuted. And Joseph, you are unmuted. Jeff, you are unmuted as well. All you guys have to do now is unmute on your side. And to do that, guys, if you scroll down to this area in the webinar screen, it's going to pull up a gray bar. Okay, and then you can just hit the microphone button and then talk live with us. Okay, and then if you're on a cell phone, just tap the middle part of your screen. Once you do that, it'll bring up a menu bar down here, and then just unmute the microphone. Okay. All right. So, guys, Safe Alpha is really popular with clients from 100,000 to 500,000. Okay, they love this portfolio to speed up the retirement process. Okay, or increase the the lifestyle and the retirement process, right? That's what I'm thinking, right? That's my mindset. Is what am I going to do in retirement? I don't want to stop staying in nice hotels and doing whatever I want, right? I want to do that for the rest of my life, right? So let's look. So it's great for investors looking to outperform the market in a safe manner. Okay, we've had 80% less drawdown compared to the Dow Jones in 2020. This portfolio uses ETFs to build to be long or short specific asset classes. Minimal changes throughout the year. Only made 5 changes, guys, in 2019. Okay, we're gonna have 150 hours of live education and Q&A with like-minded investors. No options are used, yet massively outperforming the overall market. And then once again, guys, we'll take a look at what that looks like. So our profit here, $68,000 for the month of January here, and the S&P 500 is negative. So we're at an outperformance factor at 6.8x currently here to the tick. Okay, so insane outperformance over 680% currently. Okay, and great job, Jason, by the way, on that. Okay. So no options are used, yet massively outperforms. Okay, we just covered that. The outperformance factor is 680% currently. My 7-year-old is following the system, so you guys can too, right? It's real simple, guys. As long as you can do some basic elementary school math, click some buttons on your phone or your computer, you're good to go. Okay, we do all the hard work. We're going to spend the 4,680 hours a year monitoring the market, so you don't have to, right? Design the portfolio set. You simply click 4 buttons to enter a trade, 3 buttons to exit the trade. That's it. You're going to do that between 5 and 10 times a year to grow your money. Okay, so logistically, it'll take you less than an hour. All right, so free bonus, guys. You're going to get a 30-day access pass to our Absolute Alpha Bootcamp, so you can try it out on us for free. Okay, and now the Safe Alpha trades and webinars are Monday, Wednesday, and Friday at 1:30 Eastern Time. Okay, so very cool. And any questions from anyone in the crowd? Crystal, Jay, Jeff, Joseph, Craig? Okay, next, guys, is the Absolute Alpha Bootcamp. Okay, this is targeting 100% annual return. Okay, very attractive to investors that want larger risk and returns. This service has a stock/ETF portfolio engineered for massive growth. Plus, we will send out other trade alerts for more exotic opportunities. Okay, changes will be made on a monthly basis to ensure maximum growth. Okay, and we do have to recalibrate this portfolio because it grows so fast. So this one, you'll have probably a change per month, maybe even a few months with 2 changes in it. Okay. Also, you're going to have 100 hours of live education and training each year. You're going to have a sophisticated balance of core growth asset classes. And when new ETFs come to the market, guys, new investment trusts, we're going to alert you to that and show you how to position into it and how to weight that into your portfolio. So you're not just going net long on the motorcycle without the helmet on. Okay, we will use options from time to time to take advantage of individual companies. Okay, they're rare, but they're profitable when we send them out. Okay, Absolute Alpha Bootcamp members also enjoy additional cryptocurrency portfolio that's produced a 70% return in the past month alone. That's actually over 90% now. Okay, so I need to correct those numbers. The free bonus, guys, is you get a 30-day access pass to the Safe Alpha portfolio. Okay, so you can just take a look at that on us. All right, so the exclusive live webinars and trainings are every Thursday at 3 Eastern Time. Okay, and now for all the millionaires, multimillionaires, decamillionaires out there and above, this is where you want to be. Okay, the Safe Growth Pro. Very attractive to investors with $500,000 to about 10 million to work with. Okay, we have an investor, so we haven't had anyone yet that's invested more than 10 million, but we do have a gentleman that's looking to put 18 million behind us instead of going into a commercial real estate project. Okay, so pretty cool, and I'll be excited to see that because that will bump the level of capital behind this quite a bit. Okay, so this portfolio will show you how to trade like the top hedge fund managers without the 2% management fee or the 20% performance fee. Okay, guys, once again, this is flat, right? So the millionaires are listening to this drooling, okay? And this is flat fee, guys. Seriously, no 2% management fee, no 20% performance fees. You're going to get the same performance and the same protection working with the best hedge funds. In fact, we actually smoked Ray Dalio last year with this portfolio. We did a little over 10% return. Dalio was negative 10% for 2020. So we actually smoked one of our risk management and risk parity idols. Okay, so pretty cool. All right, so you're gonna have a sophisticated balance of core asset classes. There's actually 9 asset classes, guys, in the Safe Growth Pro. You get diversification into literally every single one of the best companies that's publicly traded that exist on planet Earth today. You diversify outside of United States. You actually completely eliminate geopolitical risk by building this portfolio, right? And so our multimillionaires really just love this. Okay. Options are used to completely atomic bomb-proof your capital at times. Okay, if things get really rocky in the market, which we're not anticipating, right? But if they do, it's going to use some options to atomic bomb-proof the capital. And obviously, guys, all this safety is going to restrict the growth a little bit. Okay, but that's okay, and that's what our millionaires, multimillionaires, and above absolutely love. Okay, the Safe Growth Pro clients enjoy paying an absolute fraction of what previously underperforming money managers, mutual funds, and hedge funds charge. Okay, and it's flat, guys. That fee doesn't grow when your account does. Okay, so the free bonus, guys, right now, and we're going to change this, but you have annual access to the Safe Alpha and the Boot Camp for free. And it's actually included in this package today. So the exclusive trainings is Monday, Wednesday, and Fridays at 3 Eastern time. Okay, okay, cool. Let's see here. Joseph says, at work, Ketamut. Sorry, Dean. The only thing that I will ask from you guys when I sign up is to take care of us, because some people like us are clueless. Okay, Joseph, it's our absolute honor and pleasure, bud, to help you, and we're going to do every single thing we can, and we're going to work our tails off to not only grow your capital, but to grow your mind as well. Okay, and that's the coolest thing, guys. When we increase the really your financial understanding, your financial intelligence, right? It's so cool because then you can go teach your kids, your grandkids, right? Your nieces, your nephews, your friends, your neighbors, your coworkers, right? About what you've learned to go help them create multi-generational wealth too, right? Help them go build the garden. Help them understand that, they've probably just been building sandwiches for the past, 10 years or 5 years or whatever it is. And they'd be so much better off building a garden, right? He says, be there when we have questions and guide us through, unlike financial advisors. Yeah, great question, Joseph. So that's when you can interact with us, right? Is Monday, Wednesdays, Fridays at 3 Eastern with the pro. And I love that question there, Joseph. That's really helpful. With the Absolute Alpha Bootcamp, guys, the Thursday at 3 training. And even if you're like Joe and you're at work, right? But you can always listen to this, guys, and just type in questions into the chat box, even if you are working. Okay. Safe Alpha on Monday, Wednesday, and Friday at 1:30. Okay. Okay. Yep. And he says, unlike financial advisors where you can't get a hold of them, even though they manage your money. Thank you. God bless. Yeah, Joseph. Literally, we encourage that access. And here's the thing, guys. So let's just say you're with UBS, okay, and you have a financial advisor there. And Joseph's just saying, like the financial advisors, you can't get a hold of them. Well, guess what, guys? We have a set schedule to communicate with us. Literally a set schedule, right? So you're never going to have that issue. Okay. But we're there, guys, right? Meet with us, ask every question under the sun. The more questions you ask, guys, the more confident you're going to be behind what we're doing. And the more money you're going to get behind us, the more money you're going to make. Okay. So that's really cool. And Joseph, I'm glad you asked that question, bud. That's really cool. And he did say, thank you. God bless. Well, Joseph, thank you, bud. God bless you. Thank you so much for coming to the webinar today. Absolutely, truly appreciate your time. Okay. Nice. And Joseph, were you going to sign up for the Safe Alpha or the Absolute Alpha Bootcamp? Which one were you, or the Safe Growth Pro? Which one would you like, bud? Okay. And if you did want to do a combo, Joseph, I can get you a special too if you want to combine the portfolios. If you want to combine Safe Alpha and Bootcamp, I'll get you a discount there when you combine the two, if you wanted to do that. Okay. And anyone else too, just type into the chat box if you do want to do a combo package of Safe Alpha and Bootcamp. Happy to do that for you. Okay. Okay. Yep. Combo for Safe Alpha and Absolute Alpha. Okay. Sitting in 100K. Okay. Perfect. And let me get you that link, Joseph. I'm going to get you a nice savings here. Okay. Give me 1 second, bud. Let me grab that. And then I will, I'm going to post it into the chat box for you here, Joseph. Okay. And you will be set to jet. Awesome. And yeah, that's the $100,000 cash fire, right? You certainly want to put that to work too. Okay. And just remember, Joseph, right? Keep what you need for the year, right? So that's you have your safety net. But like I tell people, guys, just outside of that, okay, definitely, put what you can into the market, right? Because it's just going to devalue. Your cash is just going to go to trash, right? Very cool. Okay. Yep. And Joseph's saying, yep, I'm making 0.05% a year in the bank. Yeah, Joseph, let's get you making 25% with Safe Alpha, and then 100% with the Absolute Alpha Bootcamp. Okay. Very nice. So yeah, and guys, just real quick, if you do have like an annuity, okay, I talked to a lot of very wealthy people that have annuities, or they're thinking about structuring an annuity, right? And typically they're putting in, 500,000, a million, a couple $1 million, and the annuity will pay them 3%, right? But if your cash is going devaluing at 10 to 15%, depending on where you live, you're going backwards, right? Still. So you're the Fed's forcing us, right, guys, to be in assets, be in equities, right? Be in Bitcoin. It's a beautiful way to hedge off that dropping value of the U.S. dollar, or of the Turkish lira, or I don't care what country you're in, the Canadian dollar, right? Great way to stave that off, guys. Okay, and if you guys didn't kind of feel that from the presentation so far, Jason is pretty brilliant. He's really, really humble. He's a great guy. He's my best friend, just full disclaimer, and also my business partner. But he's sharp, guys. And I'm not kidding you. He can figure out complex problems faster and more effectively than anyone I've ever met in my life. That's part of why I'm business partners with him. It's part of why I'm best friends with him. Okay. Build that into your ecosystem too, right? Build that into your financial ecosystem. Okay. And just real quick, attention investors with 50,000 USD or less, type in your name, cell phone number, and investment capital into the chat box now. You do qualify for scholarship pricing. Okay. So go ahead and type in your name, cell phone number, and investment capital into the chat box. I will go ahead and get you a little scholarship pricing there. Okay. No, and just said last question. Sorry for asking too many questions. No, Joseph, it's great, bud. Is it okay to own physical gold and silver besides ETFs? Sure, Joseph. That's definitely okay. Okay. In today's environment, though, we like cryptocurrency more, right? And Bitcoin really. Okay. Nice. And Crystal, thank you for that. Appreciate that. And then Crystal, type in your investment capital too, your total investment capital, please. Okay. And then very nice and great question, Joseph. I know Jason always jokes. He's like, "Well, I won't take gold for a payment, and instead of a credit card." But he's like, "I will take silver." So I think that should tell you something, Joseph. But yeah, really, guys, cryptocurrency is working as the better monetary fiat currency deflation hedge currently. Okay. Very cool. Awesome, Crystal. And thank you for that, ma'am. Okay. And just awesome, Crystal. I will shoot you over that discount. Okay. And beautiful, Crystal. We look forward to working with you. Okay. Crystal is in Sacktown, California. Joseph is in Maine. Okay. And then if we have anyone here that's between 50 and 250,000, type in your name, cell phone number, and investment capital into the chat box now. We have a webinar special for you. Okay. So just type that into the Zoom chat box, guys. I will send you over, and I will call you guys after we get off the webinar too, when you post that in. And Joseph, I know you're working, bud, so that's why I just shot you over the link. Okay. But if you can chat later, Joe, I'd love to meet you over the phone, learn more about your investment ecosystem, where you are in life, what your goals are, see if you have kids, what all that looks like, so I can get a better feel, and have all that in my notes too. Okay. And thank you, Joseph. Great questions, by the way, too, bud. I really do appreciate that. Okay. All right, guys. So investors with over $250,000 in cash, go to, and it has to be $250,000 in cash, right? Go to portfoliobuilder.io/coaching to reserve my time for a one-on-one investment session. Okay. And guys, I only do this for my clients that have over $250,000 in cash. Okay. But I do reserve that time. So if you're in that ballpark, please feel free to go ahead and do that. Okay. So thank you so much, folks. Really appreciate your time. Yeah. let's see here. Very cool. Yes, Jeff. And let me know which link. Okay. So that's the combination link, Jeff, that I just sent to let's see, to Joseph. Okay. Okay. And Crystal said I'll be unable to chat until after 12 noon. Okay. Awesome, Crystal. I'm going to note that on my note here. Okay. Cool. Awesome, Crystal. Thank you for that too. Okay. Perfect. Beautiful, guys. Looking good. Okay. So I think we are all set, folks. So thank you so much for your time. Okay, I'm going to skip through these slides actually because I'm running a little bit behind. So this is our team, guys. Okay, so you heard from Jason, right? You're now hearing from me. That's what our team looks like. We're going to get that updated to get Jeff on there pretty soon. Just once again, guys, if you do have any questions, feel free to call me directly to 505-322-7515. And guys, once you do sign up, Jason's going to be your dedicated resource for any and all questions. So ask all questions live in the webinars, okay? Or you can always email support@portfoliobuilder.io. But the live Q&A, guys, is so cool. It really is just so neat. And look, if you're with, let's say you're with UBS, right? And you have some capital with them, you can't get a hold of your financial advisor. You're like, ah, man, this sucks. Well, guess what? Literally, guys, with Jason, you're going to meet with, and so if you have a financial advisor with UBS, they're just a financial advisor, right? So they're just a salesperson. A lot of people don't realize that. The chief investment officer for UBS, he's the person actually making the trading decisions for that firm. You're never going to talk to him. It doesn't matter if you have $25 million at UBS, you're never going to sit down with the chief investment officer. I guarantee it. Request it. If you're working with them now, I don't care if you're with Morgan Stanley. Okay. I don't care who it is. So this is the difference, guys, of being with a small employee owned business, right? You're literally going to have scheduled time with Jason on a weekly basis. Okay. And it's so cool. As Jeff was talking about earlier, right? Jeff loves to go in. He said that his favorite part of his day is learning from Jason in the webinars, right? How cool is that? And now, we're going to turn Jeff into a dangerous investor. I mean, gosh, he's made 52%, right? Plus since he started with us, right? And then I can't wait to see where Jeff is 10 years from now, right? When his brain is truly weaponized, okay, in the financial industry, right? In the investment world. That's going to be awesome, right? So pretty cool. And then also too, guys, after you sign up, you will also have Jason's father, Victor, as a dedicated support specialist to help with anything you need. So you can speak with him directly. There's no automated phone systems. Okay. You literally just get his cell phone number and you get a call from him to welcome you in right after you get signed up. All right, guys. So interested in joining, type in your name and number into the chat box and I'll give you a call after today's webinar. So thank you so much, folks. Truly appreciate your time. Joseph, excellent questions. Crystal, excellent questions. I will call you after 12 Pacific time. Okay. Jay Lim, thank you, bud. Appreciate your time here today. And once again, just make sure to multiply, right, what we sent you, Jay. It's just times 4 on that share structure, and then you're set to jet. Any questions, guys, before we hop off? Okay. Looking good. Okay. All right, folks. So thank you so much. Truly do appreciate your time and attention. Absolutely a pleasure helping you understand what you need to own now, what you need to own for the rest of your life, okay, and how to use risk parity to balance your portfolio. All right, folks. So thank you so much. Truly a pleasure. Crystal, smile from me as well to you. Thank you, ma'am. Truly appreciate your time. I look forward to speaking with you at after 12 your time. Okay, Jay Lim, feel free to call me, bud, whenever you do get the time, 505-322-7515. And Joseph, super excited to work with you, bud. Like I said before, but I'll reiterate again, it's an absolute honor to help you and your family grow your capital. Okay, we really do just take so much time, energy, and effort into helping that. And we really do take everything we do, folks, just so incredibly serious. Okay. And we'll have some fun, right? And you're going to hear people laughing and stuff in our webinars, right? It's just not all serious all the time. But we're going to, as far as the level of concentration and focus that we have to help you and your families, folks, I think it'd be tough to beat it. And I look at people that are my friends that are the advisors, right? And great people, but they're salespeople. And you start talking to them about the market and you realize they're clueless, literally within minutes most of the time, right? So it's different. It's a little bit different, guys, right? We're different. We're taking money from the financial advisors. They don't like companies like us, right? But hey, someone's got to go disrupt the industry, and we're certainly happy to do it. All right, Jay, hey, bud, thank you so much. Truly appreciate it from the bottom of my heart, bud. Give me a call when you do have some time today, Jay. Okay. I'll just send you my phone number too, just in case I didn't have it written down yet. Okay. Very cool. So awesome, guys. Absolutely appreciate it. Thank you so much. Okay. You guys have a wonderful day. We will see you again soon. All right. And everyone that signs up, we will see you in the live presentation at either 1:30 or 3 o'clock today.